Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the review of full year 2022 financial performance of select companies. Investors monitor the financial performance of a company to make informed decisions about whether to hold, sell, or buy more shares of the company. Investors make investment decisions based on financial performance because it influences stock market performance over the long term. The financial performance or scorecard shows how well a firm can use assets from its core business to generate revenue and profits. The Securities and Exchange Commission (SEC) has given companies two options to ensure they release their audited full-year earnings on time. 1. To file unaudited fourth quarter or full-year financial statements within 30 days, which is 1 month after the quarter end or year end, and file annual audited financial statements within 90 days after the year end. Or 2. To file their full-year audited financial statements within 60 days, which is 2 months after the year end, without the need to file the fourth quarter or full-year unaudited financial statements. Several companies have adopted the first option, which is to file unaudited full-year 2022 and publish audited 2 months later to give the management and board of directors time to prepare and approve the full-year financial statement as of December 2022. The full-year result captures the company's performance for 4 quarters. Hence, we are reviewing January to December 2022. Year-on-year means comparing the period this year to the preceding period. For instance, comparing full year 2022 to full year 2021. Some of the selected companies we will be reviewing include 1. Telecommunication sector. The telecommunication sector recorded a growth rate of 10.5% year-on-year in Q3 2022, sustained its positive form across the 2 quoted companies on the NGX, which are MTNN and Airtel Africa, as the number of active mobile subscribers increased in 2022. The average revenue per user, which is a metric that measures the amount spent per subscriber, grew positively year-on-year, implying that Nigerians on average spent more on communications, especially voice and data. As a result, MTNN's full year 2022 audited revenue and PAT grew by 22% and 20% year-on-year to 2.1 trillion naira and 358.8 billion naira respectively. MTNN declared a full dividend of 10 naira, bringing the total dividend to 15 naira 60 kobo for 2022. Similarly, Airtel Africa's 9-month 2022 unaudited April to December revenue and PAT rose by 12% and 2% year-on-year to $3.9 billion and $523 million respectively. We expect the stronger growth rate to persist in the sector in 2023, driven by revenue from data and fintech. 2. Agricultural sector. The 2 listed companies on the Nigerian exchange reported strong earnings on the back of stronger domestic demand for their products due to the FX challenges. Pesco's unaudited full year 2022 revenue and PAT spiked by 75% and 11% year-on-year to 83.1 billion naira and 21.4 billion naira respectively, while Okomu Oil's unaudited full year 2022 revenue and PAT increased by 58% and 50% year-on-year to 59.2 billion naira and 17.3 billion naira respectively. 3. The banking sector. The bank's performance was also strong and all the results published so far were unaudited full year 2022. Stanbic, FCMB, Fidelity, Wema and Sterling Bank's gross earnings rose by 39%, 33%, 38%, 18% and 18% year-on-year to 288 billion naira, 282 billion naira, 94 billion naira, 129 billion naira and 168 billion naira respectively in 2022. Similarly, Stanbic, FCMB, Fidelity, Wema and Sterling Bank's PAT increased by 42%, 56%, 5%, 42% and 38% year-on-year to 81 billion naira, 33 billion naira, 12 billion naira, 13 billion naira and 19 billion naira respectively in 2022. This is responsible for the positive movement in banks' share prices earlier in the year. 4. Consumer goods sector. The fast-moving consumer goods sector recorded largely positive financial performance due to the inelastic demand of their products. When consumers' demand for a product does not significantly change, despite an increase in price. Flour mills of Nigeria recorded a positive performance in both revenue and PAT in 9 months 2022, which is April to December, with a growth rate of 35% to 1.1 trillion naira, while PAT dipped by 41% to 10 billion naira. These can be attributed to the higher cost of doing business and the finance costs. Boa Foods posted its unaudited FY 2022 results with a growth of 25% and 30% year-on-year to 418 billion naira and 90 billion naira respectively. We anticipate sustained demand despite the high inflation rates that negatively impact the purchasing power of consumers' wallets due to the inelasticity of their products. We look forward to the audited FY 2022 earnings and corporate actions, which are dividend declarations of these companies. Remember that investment in stocks may not guarantee capital preservation, but it can offer a higher return than fixed income. You can allocate a portion of your portfolio to stocks based on your risk appetite and age. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.